All right, welcome back to the KingCast. I'm your host, Frank Roach. Great to be with you, as always, presented by the King Economics Division of the Social Sciences Department at the King School in beautiful Stamford, Connecticut. With me, as always, my team, Jack Zipper, Rahil Jazwal on sports. Morning, boys. The Con Queens, Lily Ryan, Nicole Rohr with us. And back from his long absence, well, it's long, only because we've been off for a couple weeks. Jake Murphy is back with us today. Welcome back, Jake. Great to see everyone. As always, we're excited to be back with the KingCast. We hope you enjoyed it as well. We start out with our hot topics. We had a follow-up kind of thing to the GameStop trading frenzy from a few weeks ago with respect to Reddit and Robinhood. Several CEOs in front of Congress this past week on Thursday to talk about the chaos of that time. Nicole Rohr is going to bring us an update. Nicole, what's going on? Do we have any more clarity on what happened?
Yeah, so GameStop was back in the headlines this week with hearings on Capitol Hill, and it is also a story that is near and dear to me because I was able to experience the volatility in the stock firsthand through our investing simulation run by the investment club here at King. The GameStop story has many facets to it. To begin with, there is the David and Goliath element to it, with Reddit investors organizing and taking on the Wall Street kingpins. A sophisticated hedge fund called Melvin Capital is estimated to have lost $3 billion on a short position in GameStop, and short sellers are generally believed to have lost $19 billion at one point. When you're long in a stock, the most you can lose is the price of the stock. The stock can only go to zero, and stock price can't go negative. But a short position has unlimited exposure. There is no cap on how high a price of a stock can go, which is why the losses for the hedge funds were so staggering. Nevertheless, the GameStop saga also has suggestions of manipulation by Wall Street kingpins. While Melvin Capital lost a lot of money, ultimately the Reddit investors also lost a lot of money. GameStop shares would likely have fallen naturally at some point given the stock price was not driven by fundamentals, but instead by momentum from Reddit investors piling in. Nevertheless, there are allegations that a large Wall Street fund called Citadel, who is a large investor in the Robinhood trading platform used by the Reddit investors, forced Robinhood to prevent the Reddit traders from buying shares of GameStop, which caused the stock to climb. Without being able to buy more shares, the upward momentum was stopped. More to come on this as investigations and lawsuits provide a window into how and why Robinhood shut down the trading for Reddit investors in GameStop. Another aspect to GameStop phenomena that I found particularly interesting relates to a concept we recently learned in economics class with Mr. Roche, and that is the prisoner's dilemma. In order for GameStop to continue to move higher, all the Reddit investors needed to be coordinated. If some investors wavered, then the stock could go down, and if everyone headed for the exit, the stock would fall a lot. This is very similar to the prisoner's dilemma, where the best outcome is when everyone trusts each other and sticks to their story, or in the case of GameStop, sticks to the trade. That is likely why they were posting on Reddit that they would never sell their GameStop shares no matter what. They wanted to give confidence to stay strong and not rush for the exit. However, as is usually the case with the prisoner's dilemma, you end up in the quadrant in the lower right where you get a suboptimal outcome because you can't trust the others and act accordingly. From the King stock competition, I got to experience firsthand the dangers of participating in these types of situations. But fortunately, the only thing I have at stake is fake money and market watch. The people who invested real money sustained large losses as the GameStop price fell quickly. To make matters even worse, many of them bought their shares on margin, meaning that they borrowed money to buy their shares. So if you borrow $200 to invest in one share of GameStop at $400 a share, and then GameStop falls to $50 a share, you not only lost $350 or more than 80% of your investment, but you also have to figure out how you're going to pay back the $200 loan you took out to buy the shares with only $50 value of your one GameStop share. Of course, these investors made their own choices, and there was plenty of news and stories about the dangers of investing in GameStop, but that doesn't take away from the fact that people suffered from this incident. Robinhood is also the subject of a lawsuit from a family whose son committed suicide when the trading platform mistakenly posted in his account that he had lost hundreds of thousands of dollars. Apparently, the son tried to reach out to Robinhood customer service and couldn't, as many others have alleged, and became so stressed about the loss. Very sad stories. There are many other storylines from the GameStop saga, and more information will come to light about the situation. As for me, while I will undoubtedly finish in last in the investment club stock competition as a result of investing in GameStop, I have learned a tremendous amount about the stock market. I believe this will ultimately be more valuable to me when I am able to invest real dollars in the stock market.
Okay, as always, a great report, Nicole. A little tongue in cheek in there as well, a little teasing yourself in terms of trading success or not. And of course, that's something that every investor has to deal with, right? The intestinal fortitude needed to trade to begin with, the risk tolerance. I love the inclusion of great game strategy in there, Nicole. Nice connection point. And it's something that everyone can consider for sure, especially amongst the young people today, right? Because that's the gamification. That's the word, right? Gamification of trading. Anyway, you touched on the David and Goliath element between small investors and powerful hedge fund professionals, Nicole. What do you think that investors all over the world can take away from all of this and what we saw maybe on Thursday in Congress?
Yeah, so I talked about the many investors who bought their shares on margin, and I think that these losses are an important part to the more human side of the story. You have many young, novice, first-time investors who lost a lot of money in GameStop and now also have loans that need to be repaid. These are not the billionaire fund managers on Wall Street, but everyday people who work hard each day to make a living to get by. Of course, there are people like Keith Gale who claims he became a millionaire from GameStop before the stock even skyrocketed. But for the most part, there was a great amount of damage and loss to many investors in GameStop. And even though this whole GameStop saga was nothing like your ordinary market behavior, this just serves as an example and reminder of how careful investors should be with these turbocharged stocks.
Now, Keith Gill, is that the financial advisor from Massachusetts?
I'm not sure, but I know he was like
anyway,
the driving force.
Yeah. That's just this guy. I think this is the guy. He was a part of the testimony on Thursday, claiming that he believes the fundamentals of GameStop being a price that should rise over time based on fundamentals. It's really funny defense because, of course, GameStop is the opposite of that. All right, great report as always, Nicole. Thank you so much. I want to keep on that theme, right? We're in this kind of financial mania right now in a variety of ways during a pandemic, all kinds of chaos around the world. And we have these unusual financial developments going on. And of course, Bitcoin, cryptocurrencies at the front of that. New record highs every day for Bitcoin. Lily Ryan, you've been watching this very carefully for us. It's exciting if you're in Bitcoin or you own Bitcoin and you're making money, it must be very exciting because where's the top? Again, this has become a substitute for gold, basically a hedge for uncertainty and inflation. Lily, update us on the chaos, the craziness, or you described it, the smashing of new highs for Bitcoin.
Yeah, so Bitcoin smashes through $52,000 to hit a new all-time high. On Wednesday, Bitcoin surged to $52,340, which was an unimaginable number at the time it was trading for only a few cents around a decade ago. Bitcoin was created in 2009 and has somehow gone from a joke to a worldwide phenomenon, or digital gold, that is beginning to become more popular among investors. Major banks such as JP Morgan and Goldman Sachs have shown serious interest in the crypto market. An investing arm of Morgan Stanley, known for its expertise in picking growth stocks, is considering adding Bitcoin to its list of possible bets. For Wall Street firms, an inability to offer Bitcoin to those clients raises the risks of losing them to other managers. That may spark fresh discussions in the industry about opening up to the asset. There have also been a significant number of companies such as MasterCard and PayPal that have made moves to support cryptocurrencies. Last week, Tesla said it invested $1.5 billion into Bitcoin and planned to accept the digital currency as payment for its products. Dan Ives, Wedbush Securities Managing Director, said, "We believe the story and theme here is much larger than just investing in Bitcoin and predicting its future price, but rather around the potential ramifications that crypto, blockchain, and Bitcoin could have across technology in corporate world for the next decade." Although Bitcoin is at a high right now, the digital coin is known for its volatility throughout the years. In 2018, the currency lost 80% of its value, but has quadrupled in 2020, gaining over 70%. Building on that, much of the industry's skepticism centers on Bitcoin's unpredictable price swings and the lack of things it can buy more than a decade since its creation. For example, Bitcoin rose to 20,000 in 2017, but like I said, was later followed by a plunge in 2018, which saw the cryptocurrency lose 80% of its value. But faithful followers have felt vindicated this year.
Great report, Lily. Really kind of exciting, right? This is the idea of money. We define this in economics: unit of accounts, means of exchange, and a store of value. Cryptocurrency is becoming more and more like that. And there's kind of there's a bit of a cynical view on this. Right? It seems people are just chasing wealth, aren't they? Oh my God, here's an opportunity to make more money. Let's trade Bitcoins, yeah? So this has become a speculative asset now. Remember, the key value for Bitcoin is its scarcity. But Lily, based on Bitcoin's success so far, what do you think the future of cryptocurrencies looks like, say, the next year or so?
So now that digital currency has become a more recent phenomenon, I know it's been around for a while, but I'd say during the coronavirus, its phenomenon is like been more heightened. There have been thousands of altcoins, which essentially means an alternative to Bitcoin. Although these are the same in theory, there are big differences, and the rules aren't exactly the same when it comes to how coins are mined or produced and the amount of supply available. Because altcoins are designed to improve Bitcoin's flaws and tweak certain rules of the operation, I could see many new competitors entering the field of crypto. Because the creation of cryptocurrency has become easier, there will be thousands of alternatives, with newly minted coins improving on prior ones. So it's a race for visibility with the public and ultimate success regarding which crypto will achieve dominance. And like I said, there have been thousands and thousands created. And an example of this is Dogecoin, which has actually been around since around 2013. But it's kind of interesting because the face of it is the Doge meme, and it was created as a joke, but it went up over 800% in 24 hours due to popular celebrity recognition such as Elon Musk and Snoop Dogg. It's just crazy how many people are getting involved.
Yeah, it really is. And by the way, this is nothing but just making money for the sake of money, right? This Dogecoin, and thank you. That's, by the way, this is what did I learn this week. Okay, this is my what did I learn this week moment. If you don't mind me going early, how to say this Dogecoin. Thank you very much for it. I didn't know how to pronounce that. And I wasn't aware of the Doge meme, but now I've made the connection point. So that's my what did I learn this week. But anyway, yeah, Elon Musk came out and said, I like Dogecoin the other day, and it skyrocketed, right? This is market manipulation. This has no value. This is the tulips, the tulip price hike of decades, thousands, hundreds of years ago, right? This is butter chaos. This has been going on in history over the time. This is really scary stuff, something that the officials at the monetary and fiscal level should pay attention to. All right, great report as always, Lily. Thank you so much for that. And we're going to have one more hot topic this week, a little unusual. We usually just stick with two, but it looks like the first shot has been fired against Facebook. More countries are following on. Jake Murphy's going to update us on what happened in Australia with respect to Facebook and news. And I noticed today we have more articles about another dozen countries or so trying to follow suit. Jake, what's going on? Is this a shot across the bow for Facebook?
Oh, that's right. Some pretty crazy stuff happened this week between Facebook and the country of Australia. So this Wednesday, Facebook restricted their entire news feed in Australia, preventing users from sharing following news links on the social media platform. This was in response to the Australian government beginning talks of forcing the social media platforms like Facebook to pay news accounts for linking and using their content. The action was taken primarily to save Facebook's bottom line, which would have been affected if the proposal was put into place. Disabling the newsfeed has been called a nuclear option for Facebook, as the backlash from pulling the plug has added to the already growing distrust on the company's practices. The events in Australia have caught the attention of lawmakers from countries around the world who are thinking of implementing similar laws. With Facebook's hesitated move to blatantly block users from accessing the news, people are wondering if this reaction is to be expected when big tech companies are threatened with regulation.
Yeah, I'm not a huge fan of Facebook, never have been. I am on it. I'm on the platform for family reasons and originally for political reasons. But this doesn't bother me. Is anyone bothered by the fact that someone's going to have to pay for the work of journalists?
Sure bothers Facebook.
It sure bothers, obviously, right? That's a revenue stream for them. Now, just a very common sense question. If you can't get your news on Facebook, where can you then get it? If right, if CNBC is sharing their news on Facebook, where could you go get the news that's not on Facebook anymore?
From CNBC.
CNBC.com. I mean, really, this is a little bit of touch of laziness, right? Dependency on this. Remember, the information on Facebook isn't new content, isn't original content from Facebook. It's out there on another website. So anyway, I wouldn't be too bothered by this. I like what they're doing. Facebook is a near monopoly, not a huge fan of monopolies. Very inefficient. Deadweight losses result from monopolies. Anyway, all right, good report, Jake. Thank you so much for that. And now it's time for
What Did We Learn This Week?
Our fun segment. We haven't done it in a while. Hopefully we can rotate our teachers, right? So we're only 5 of us and we only have 3 or 4 teachers each. So let's try and give some shout outs on a rotating basis. Having said that, Jack Zipper, start us off. What did you learn this week?
Well, actually, what I learned was not from a teacher. What I learned is how much I miss snow days. And
Tell us.
I'm telling you, that this snow day was really, really good day for me.
Okay, that was Friday, right?
Yeah, that was
Yeah.
yesterday.
So we've had this challenge, as every school is confronting. The remote learning tools can tend to ruin a snow day. And of course, many parts of the country don't know what snow days are, of course, but in New England, Northeast, it's a bit of a rite of passage. So something that's been a little bit of a concern for all. Now, I enjoyed the snow day as well, but we didn't really have any snow here on Friday. Did you have snow where you were? Yeah, so a real snow day is right. You're hunkered down, it's snowing, it's cold, you go sledding in the afternoon, whatever. All right, what'd you learn this week, Rahil?
In my environmental science class, we continue to learn about the problem of water resources and how if we continue to go as we are right now in like 15 or 20 years times, where the resource is going to be completely depleted.
And your reference a few weeks ago was the RLC, correct?
Yep.
Yes, I remember that. And that is Mr. Brock?
Yep.
Okay. And Lily Ryan, what'd you learn this week?
Going off of what Jack said, I actually didn't learn something from a teacher this week. While writing my story, I learned what an altcoin was, and I learned more about the history of Bitcoin, which was so interesting considering how much information there is on the block.
And if I'm not mistaken, Lily, Bitcoin created by a person from Japan, yes?
I believe so.
Something, Toshi or something, I think.
Yeah, he's still anonymous. They don't know his exact identity, but he is from Japan, I believe.
Okay, you know this bit. Okay, Jake, thank you very much for jumping in there. What'd you learn this week, Jake?
Well, this week in my AP psychology class, I learned about lobotomies, which is a pretty crazy thing. It was an old procedure that they used to do a while ago, where they would get like a poker and like go on above your eye and try and scrape out some stuff from your brain. And they would do it to people who had like psychological issues. And what it would do, it would sort of render you sort of childlike. It wouldn't let your brain think as critically. And so it would solve some problems, but definitely wasn't worth it. And they definitely don't do it anymore.
Yeah, that sounds gruesome. I've heard stories about that. And it wasn't that long ago. I think we go back 50 years.
50s, yeah.
Yeah, it really wasn't that long ago.
They did it.
So, okay, good one. A little creepy on that one, Jake.
Yeah, thank God for modern medicine. I would not want to live in any other time period.
Okay, thank God for modern medicine. And Nicole Rohr, finish this off. What'd you learn this week?
In econ class this week, we learned about a value-added tax, which places a tax on the difference between the value of raw materials and the value of the product a firm sells. And firms would pass the tax on to consumer in the form of a higher product, or in the form of higher prices for the product. And people argue that a value-added tax would increase saving and investment because consumption rather than saving would be taxed.
Good, excellent remembrance from our class, of course. And we were bringing up that discussion, Nicole, which many people don't realize. Who pays the corporate tax? And the idea is that corporations pay it. We were talking about the idea that's passed along to consumers. Any level of taxation is paid by the consumer. All right, and that was...
What did we learn this week?
Okay, always fun. All right, it's time to check in our great King community. What's going on around King in the sports world? Start us off, Lily Ryan.
From fracking and genome sequencing to military intervention in transitional conflicts, King students practice the art of debate during Harvard University's annual simulation of the United Nations. You can read more about this event in the weekly community newsletter.
Registration is now open for the 2021 King Summer Institute. Enroll for academic classes for grades 6 to 12 and fun camp for kindergarten to grade 6.
On March 2nd from 7 to 8, the King Athletics Department and the college counseling team will present College Athletics, from recruitment to experience, for students and parents. College coaches, former collegiate athletes, and King alumni will share their insights.
Congratulations to Addison Klein, who placed second in the National Academic Quiz Tournament's Budward Baseball Quiz Bowl competition. Addison and Jack Zipper founded the King Quiz Bowl as a competitive club this year.
Jack gets a shout out on the KingCast. Nice, Zipper. By the way, that is some sentence. National Academic Quiz Tournament's Buzzword Baseball Quiz Bowl. Holy cow, that's unbelievable. All right, that's kind of fun. All right, that's what's going on with that great King community. As always, we like to keep up to date with our wonderful King community. We've been off campus for a few days now because of the weather. Looking forward to getting back on campus this week. All right, it's time for sports. Jack Zipper and Rahil Jaswal.
Thanks, Mr. Roche. In tennis, Naomi Osaka defeats Jennifer Brady in the final of the Women's Australian Open. Osaka defeated Brady 6-4, 6-3 to win her fourth Grand Slam title, which includes her second Australian Open title. Her total is now third among active female players behind Venus and Serena Williams. On the men's side, Novak Djokovic and Emil Medvedev will face off in the men's final at 3:30 a.m. Eastern Time, so you will have to tape it. In college basketball, the NCAA will allow fans for their Division I men's basketball tournament, or what more well known as March Madness. There will be a 25% max capacity that includes players, staff, family members, and fans. All will have to wear masks and practice social distancing. Let's go down to a hill for some NFL offseason.
Yeah, in the NFL, Carson Wentz has been traded to the Colts for a second and third round pick. Wentz was thought to be the Eagles' number one until recently when the Eagles drafted Jalen Hurts. Philly was forced to eat $33.8 million in dead cap, which is the largest in NFL history, beating out the $22.8 million hit the Rams took by trading Goff earlier this offseason. And in the MLB, San Diego Padres superstar Fernando Tatis has signed a 14-year, $340 million contract extension. Tatis, who's only 22 years old, signed the largest contract ever given to a player before he reaches arbitration. The shortstop joins Manny Machado as the Padres do of $300+ million signings. Tatis slugged 17 home runs in only 59 games this season. So sky's the limits for him and the Padres.
I guess they have some extra money in baseball these days, huh?
Yeah, these
That's a
contracts
huge
are,
contract. Are they the highest paid now amongst the professional sports?
I think Tatis is probably it's the third highest in baseball.
Okay. Is baseball, though, as a sport, the highest paid sport?
Usually, but I think Patrick Mahomes' deal is.
Okay.
Yeah, Patrick Mahomes is a larger deal, but I think the average salary is because you have the minor leagues too, which are not, there's not as many players being paid as much. So
now, meanwhile, I'm a big fan of Pat McAfee, the Pat McAfee Show, former kicker for the Colts. Not a lot of excitement out of Indianapolis with this trade. Am I right?
It depends on which Carson Wentz they get. If they get this year's Carson Wentz or last year's Carson Wentz, then I don't know. But if they get 2017 Carson Wentz, where he was probably going to beat out Tom Brady for the MVP if he stayed healthy, then it's different. But
okay. All right. Well, anyway, good update there. And also now, as we move away from football, we might want to talk about the NHL. I know Lily Ryan. Lily, you're a huge NHL fan, right?
Yeah.
Who's your team?
Unfortunately, right now, the New York Rangers, they haven't been off to the best start,
They're
but
struggling, yeah.
they just won in overtime against the Flyers the other day, and they're playing against the Capitals, which is good and bad. I mean, the Capitals, I will say, are the better team, but I think it will give them a chance for redemption and hopefully put them on a high if they win this game.
Good. Now, Lily, is it a proper season? Are there fans in the stadiums? Is it a full season? Are they traveling between cities?
So it really depends on the team. For example, Madison Square Garden just announced actually in 3 days they're allowing fans into the building, but it's not close to maximum capacity at all. And it's very, very complicated. You need to provide negative tests. You need to wear a mask, only 2 people per seat or like per grouping or whatever. But also there's limited games. I think there's around like 59 games for the NHL. And they're only, I'd say 17, maybe a little less in.
Okay, great update for the NHL. Thank you. On the spot, Lily Ryan. All right, and that is sports for us this week. Thank you so much. All right, thank you for that update on sports, as always. And now we move to economy and markets. One of the hot things we haven't discussed, which is very important to discuss, is Texas. It's freezing. And electric bills have gone parabolic for many in Texas. Millions still without power, dozens dead. Unusual cold snap, a massive and unusual storm dumped snow and ice across the Midwest and South, taking power production offline just as consumers turned up their thermostats amid the frigid temperatures. No power source was immune, so the political sides of this are going to have some fun with each other. Coal, natural gas, crude, wind, solar production all dipped. Pipelines froze, full of natural gas flow. Of course, outages were concentrated in Texas as the grid forced to shed low. What that means is they had to dump power right? Because they were overused. Unable to keep pace with the spike in demand. So not only was the infrastructure challenged by the cold in terms of producing energy, people at home wanted more energy because it was freezing cold, right? So they turn up their heat. For Texas, the next step that can be taken would be to winterize equipment, something that obviously hadn't been considered necessary, right? Very unusual cold event for Texas and that whole region. This is going to bring up the whole debate about the Green Deal, of course, and whether we're moving towards a warming planet or a cooling planet, which has been debated for a long time. The state, as we know, is used to extreme heat and drought, but its infrastructure simply is not equipped to operate in extreme cold. The majority of the state's power is controlled by the Electric Reliability Council of Texas, which is known as ERCOT. It's a competitive pricing market, meaning it trades on supply and demand. That yes, unless you're thinking you're not sure, yes, electricity is traded in open markets just like stocks and bonds and currencies. And speculators engage in buying low and selling high to make money for themselves with no concern about what electricity is used for. And so companies are trying to bring the cheapest form of energy to the market, which can come at the expense of building out more reliable infrastructure systems. Over the past 25 years, the electricity delivery market has really changed, not only electricity, but natural gas as well. And many small wholesale companies come in between the producers of electricity and the users of electricity and try to buy and sell that electricity from the producer to the user. So with utilities scrambling to keep the lights on, power prices are surging across Texas as contractual obligations force companies to buy at any price. Unregulated markets are exasperating price swings as energy producers are forced to buy megawatts in the open market. Now, some of this heightened cost could end up on Texas consumers' utility bills. Companies such as Griddy, one of these new types of companies delivering energy to houses, they don't produce anything, they just buy it and sell it. Gives consumers access to wholesale electricity prices, have outlined ways for its users to switch power in an effort to shield them from volatile price swings. So they can switch power in terms of what source they're getting, but they didn't have enough time to switch in this case. The power price is usually about $20, $30, $40 per megawatt hour, says an analyst out of Newberger Berman. And of course, many people are pointing fingers at renewables. Of course, all renewable energy, solar panels were no good, wind turbines froze. But the reality is most of the energy supplied in Texas is still natural gas, and natural gas had the same challenges. Okay, solar and wind went off, frozen blades, wind turbines weren't working. And so in the wake of the disaster, the role of renewables in Texas will certainly get a reevaluation, right, as will the fossil fuel usage. So really interesting development in Texas coming in where we have the Biden administration really focusing on the Green Deal. Both sides have something to point to at the other in terms of who's to blame or what's the better source of energy. And so that debate is going to rage for us here in the weeks ahead. Okay, quick update on Texas. Hopefully they'll get back to some warm weather and people will have their lives back in order. All right, for the week ending February 19th, let's check on data for the week. Jake Murphy, start us off.
All right, starting with Friday, January existing home sales up 0.6% at 6.69 million units on an annualized basis versus 6.65 million units in December.
On Thursday, initial unemployment claims week ending January 30th, 861,000 versus 848,000 in prior week. February Philadelphia Fed Index 39.5 versus 52.8 in January. January housing starts down 6% to 1.58 million units on an annualized basis versus 1.68 million units in December.
On Wednesday, MBA mortgage applications week ending 2/19 down 5.1% versus down 4.1% in prior week. The average 30-year mortgage rate closed at 2.98%. January producer price index 1.3% versus 0.3% in December. January retail sales up 5.3% versus down 1% in December. January industrial production up 0.9% and December capacity utilization at 75.6%.
On Tuesday, February Empire State Manufacturing Index 12.10 versus 3.5 in January. December Treasury International Capital Flows 121 billion versus 149 billion in November.
And Monday, there was no data.
Okay, good week of data. Pretty full, not good on claims. Claims has gone back up. This is mostly California, Illinois, and New York. 3 red states still in lockdown. So real concerns still remain there. The labor market is not as improving as we hoped. Existing home sales still doing great, but what we saw on Wednesday, right? So we had existing home sales up strong. And we saw on Wednesday mortgage applications down quite a bit. And the problem is we have an affordability problem now. The home affordability index is above levels of 2008, 2009, and people just can't afford to buy the homes, even though people want to buy the homes. All right. And so really interesting development as a result of the pandemic crisis. International flows of capital, the Treasury International Capital Flow data, that's the appetite on the part of foreign nationals to buy U.S. government bonds or U.S. corporate debt. All right, let's check in on this week, beginning February 22nd. What's the data for the week? Start us off, Lily.
On Monday, we have no data.
On Tuesday, February consumer confidence.
On Wednesday, we have MBA mortgage applications week ending February 19th and January new home sales.
And on Thursday, we have initial unemployment claims week ending February 20th, January durable goods orders, preliminary quarter 4 GDP, our second look at quarter 4 GDP, and Jan pending home sales.
And Friday, January international trade balance goods only, February Chicago Purchasing Managers Index, and University of Michigan consumer sentiment. All right, let's move on to check-in markets. Remember now, we want to evaluate data, right? We want to evaluate data in terms of what it means for economic performance, and then we look to how markets react to that, okay? Markets are driven by the data in terms of expectations, and so that's an important connection point you want to make as young people become more interested in investing. This is markets for the week over week, ending Friday, February 19th. All right, let's get started. Jack, start us off. S&P 500.
S&P 500, 3,906.71, up 65 points.
NASDAQ, 13,874.46, up 331 points.
3-month Treasury, 0.033%, down 4.3 basis points.
10-year Treasury, 1.34%, up 25 basis points.
30-year Treasury, 2.135%, up 29 basis points.
Euro dollar, 1.2120, down 50 pips.
Dollar yen, 105.43, up 166 pips.
Sterling, 1.4010, up 330 pips.
Dollar CAD, 1.2610, down 120 pips.
West Texas Intermediate, $59.01, up $7.
Brent, $62.91, up $7.50.
Gasoline, $1.79, up 25 cents.
And gold, $1,783, down $72.
Yep, crypto rallies, gold sells off, inflation's rising. Really weird, really weird. Something's not connecting. By the way, back to that data analysis. Keep an eye on PPI. Inflation's rising where the Fed had anticipated. So inflation could be a concern in the near future. All right, time for our friendly reminders. Lily.
Do your reading.
Do your homework.
Come to class prepared.
Use your blinker when making turns or switching lanes.
Stop signs mean stop.
No texting while driving.
All right, that's it for us. We forgot to praise ourselves for our Super Bowl predictions. The greatest living American did win the Super Bowl, Tom Brady, as we all predicted. Okay, so well done. I think Lily and Nicole took the other side of that one, just to be the countervailing force, right?
Yeah.
Maybe we did something like that.
All right, Jack Rahil and I were all on the Buccaneers. Jack and Rahil for football reasons, me for, of course, Tommy Brady reasons. But that was great. Tommy Brady gets 7. So exciting for Patriots fans. And that's it. Join us again next week. Tell your friends and family to listen to the KingCast at kingschoolct.org, campus live page, and we are out of here.